So, yeah, I will stop that. Yeah. Okay. Good afternoon, Dr. Lakmika Perra, who's our speaker this evening, this afternoon. Our Vice President, Mr. Hennayaka Bandara, Council Member, Mr. Gajendra, the participant members of CMA Sri Lanka, and participants. It gives me great pleasure to welcome you to our webinar on implications on S1 and S2 sustainability standards for reporting. This is something of great importance to everyone, and I'm very happy that we've been able to invite Dr. Lakmika Perra, who's really an expert in this area and has been closely involved with CMA. He is on our judges panel of the Integrated Reporting Awards and also have been helping us in the academic area. So we are very happy that you are here today. Now, this is the area that we not only is a global matter, because since we are members of IFAC, it is necessary that our members are conversant, and also since we are involved in the reporting area, especially on integrated reporting, because there would be certain changes that could take place, but not in this year, but maybe from next year that it will come into force. So if you look at IFRS S1, it is on the general sustainability related disclosures, and of course IFRS S2 on the climate related disclosures. So this will also cover the industry-based climate related topics, and I'm sure our speaker today would cover all these in detail. Now, the IFRS area, of course, I will not cover because I'm sure that with the areas really covering on the International Sustainability Standards Board, because it's really consolidates the work of market-led investor focused reporting initiatives. So some of them are, that is of course the SASB standards. Then we have the Task Force for Climate Related Disclosures, or TCFD recommendations, and the integrated reporting framework. Now, this is something of importance. I'm sure that you will also be able to enlighten us on this. And of course, the Climate Disclosure Standards Board. So that's the CDSP. And I think it's also covering the ISSP develops the IFRS sustainability disclosure standards to meet investor information needs and enable companies to communicate decision useful information efficiently to global capital markets. Now, there are also other parties. ISSP is committed to uh, delivering standards that are cost effective, decision useful, and market informed. Its work is really backed by very powerful organizations, the G70, the G20, the International Organization for the Securities Commission, or ISCO, the Financial Stability Board, the African finance ministers, and the finance ministers and central bank governors, and in more than 40 to 50 jurisdictions. So I think this is a brief. I'm sure all details will be given by Dr. Lakmika, but I would like to introduce Dr. Lakmika. Dr. Lakmika is a academic, a senior lead. Actually, academic is the one who is conversant both in the academic and also on the practice. So I'm very happy that we've got someone who's really going to tell us more about the sustainability standards. He has held leadership positions in academia, industry, corporate, and government sectors. This includes professional level appointment, board positions, consulting appointments in corporate and government, complemented by experience as a CEO and CFO in the corporate sector. Lakmika is a global authority in integrated thinking and reporting, which is the basis of the global IFRS sustainability standards S1 and S2, and his expertise extends to SDGs and GRI standards. I think a lot of you may be also familiar of GRI because Sri Lanka has been using GRI for some time, and they might like to know how with the IFRS how they could make use of it. His experience includes over 18 years of university, executive and corporate experience, including sustainability and reporting, value creation, resource allocation, multi-capital view, engagement and partnership experience, including corporate, faculty and civic engagement, corporate consulting, social enterprising, entrepreneurship, teaching educational development and delivery, strategy development and implementation. I mentioned about value creation. I think he's been helping us with the integrated reporting, where he's been speaking to us quite a lot on value creation. He has received multiple international, national, and university awards, including an Australian government teaching citation or award, various vice chancellors awards, and international professional awards from profession and corporate sector. Currently, he runs his own consulting practice on integrated thinking, reporting, and sustainability, while also working for the University of Melbourne Chancellery in the role of manager, partnerships, planning, and reporting, engagement, and partnerships team, which focuses on strategy setting, civic engagement, and partnerships. He also has a senior fellowship with the Melbourne Business School. So I'm sure that Dr. Lakmika, who's very well known to us, has kindly consented because I've been requesting him for some time, but he's been so busy that we have not been able to get at him. So anyway, thanks a lot, Dr. Lakmika, and may I now hand over the stage to you in order that you could do the presentation.
Thank you, Professor. Thank you very much indeed. An absolute honor and a pleasure to be here with all of you. So thank you very much for the invitation. So before we start, just to give you a quick overview. So I'm going to touch on S1 and S2, but I'm also going to talk about the broader issues of climate change and sustainability, ESG overall, and then take it from there. And my focus is to be climate first, but not climate only. So keeping that in mind, I'll just give a quick overview of my qualifications and professional membership. So I've got multiple memberships. I'm a CA and a CPA, and I've got a PhD, a few master's degrees from Newcastle, Deakin, RMIT, and also my undergrad degree from Manchester Metropolitan University in the UK. I've got an exec certificate or graduate certificate in leadership from Harvard Kennedy School as well. I also like to acknowledge the Wurundjeri Waiwarang people, who are the traditional landowners of the Kulin nations where I am located right now, and I pay my respects to their elders, past, present, and emerging. So, first and foremost, to set the stage, human impact on environment and climate, it's a big issue. So ESG relating to the health of the planet is the most significant challenge we have today. And there's no other challenge that is greater, because climate change leading to environmental and climate disasters has created imbalances globally. So the human impact on the planet has created significant issues such as, for example, precipitation of water, what water falls to the planet, heat waves, droughts, storms and cyclones, and extinction level events. So all these things are creating some significant issues for the planet. So the implications are significant to sentient beings of this planet, not just humans alone. So we think that the climate change aspects are only related to us, that it's our living conditions, but not just us. Every single sentient being, including plants, are affected by climate change and also ESG related aspects. Humans are the biggest impactors to the climate, and that is a given based on all evidence to date. So keeping this in mind, let's have an understanding of the importance and relevance of ESG in accounting. Okay. Now, environmental and ESG accounting is essential in firstly understanding the impact of this climate-related stuff. So without having an accounting framework, without having not accounts, but accounting, Now, there's an interesting debate on the definition of the word accounting. Accounting means not just numbers. It goes beyond that. Accounting is, accounting for something, accountability, or count, not just counting, but making account of certain things. So that is the new and emerging definition of accounting. So as accountants, we go beyond this concept of just being looking at financials, but to account for other things in a broad aspect of it. So keeping that in mind, let's understand, and understanding, as I said earlier, is the first step in understanding some, then identifying, measuring, managing, and reporting. So without understanding the overall picture, we cannot identify, measure, manage, and report. So this is very relevant to corporate and business in managing and mitigating the impact on the environment and on the planet overall. So that kind of sets the stage for what we are going to talk about today. Now, let's look at the current state of standard setting globally. Okay, so we have the IFRS or sustainability standards, which has now released the S1 and S2 standards, which is being influenced by a number of areas. So previously we had the CDP, SASB, Integrated Reporting Council, International Reporting Council. Then we had the Value Reporting Foundation and CDSB. Now all of these entities have been included or amalgamated into the IFRS Foundation and to the ISSB. So TCFDs are no longer there. They also have been amalgamated into the ISSB, and GRI is a complementing framework in addition to the Sustainable Development Goals. So we'll talk about that a little bit more into the presentation. But Prof, how do you want to take questions? I'm happy to take questions as and when we go, or at the end.
We'll take it at the end. Otherwise, there'll be
no worries, Prof. Yeah, that's fine. So let's start off by IFRS sustainability standards and who needs to report on it. Who are the people or who are the entities that need to report on it? Obviously, listed companies have to report on it. That's a given in most countries. In addition to that, certain countries have certain requirements for higher emitters. So those in, for example, in Australia, those who are identified within the National Greenhouse Energy Reporting Act is required to present under the sustainability standards. And also, I put a caveat here, any other organization that is interested in reporting this can also follow the standards, and there are significant advantages of reporting under the IFRS standards. So why report? Transparency of information can be very powerful. So comprehensive disclosures would drive better capital allocation, which drives better outputs and outcomes. In other words, this will create better value for organizations overall. So again, comprehensive disclosures drives capital allocations, drives outcomes. So companies, when they provide a multidimensional holistic view of value creation, the investors then compare companies based on a comprehensive set of disclosures, not just one. So that is a significant advantage where we can actually measure apples with apples as opposed to apples with oranges. So there is comprehensive disclosures would give the investors a better way of comparing organizations overall. Investors reward companies with strong holistic performances and encourage lagged companies to improve. And companies then compete to improve holistic performance to attract capital, or in other words, investments, which improves economic, environmental, and social outcomes. So in essence, when you have transparency of information, it leads to better value creation. Okay, so the first standards and the bigger picture. Now, we are only familiar with S1 and S2 standards today, but there is potential, and the S3, S4, S5 standards are being considered and they are being discussed as we speak. So there are a couple of fundamental aspects which drives, or which is the underlying pillars, as they call it, the core values of, or core principles of the first standards. There are four. One is the governance. The other is the strategy. The third is the measurement. And fourth is the risk management. And those who are familiar with the integrated thinking framework will quickly pick up on this and relate this to the integrated thinking model. So if you look at the integrated thinking model, there are elements of strategy and resource allocation, risk management, performance, and future direction. So all these things are embedded into this in the form of strategy, governance, measurement, and risk management. Let's go through each of these four core areas or core contents, as they call it, in a little bit more detail. So if you look at governance, the governance processes, controls, and procedures the entity uses to monitor, manage, and oversee the different standards related to risks and opportunities have to be considered under governance. Secondly, the strategy, the entity's strategy for managing S1 or S2 risks and opportunities that could affect the entity's business model and strategy over the short, medium, and long term. Thirdly, risk management. The process the entity uses to identify, assess, prioritize, and monitor sustainability or climate-related risks and opportunities. And finally, measurement, or what they call metrics and targets. The entity's measures of performance in relation to sustainability or climate risks and opportunities, including progress towards any targets the entity has set or is required to meet by law or regulation over a period of time. Now, I look at the standards slightly differently. I'm going to go to the slide before. Now, my interpretation is that mostly these four areas are core to all the standards. So the difference, how it relates to S1 and S2 differs, because when you look at S1, these four elements are nuanced towards broader or general sustainability related financial reporting requirements. Whereas when you look at the S2, these are then nuanced towards the climate related dimensions. So my view is that these are the core elements, in other words, what they call the core contents, which actually go through each of the standards that are being put out now or will be put out in the future. Now, there are some other elements. There are conceptual framework related foundations, conceptual foundations, as they call it. So this is related to the conceptual framework as well, which is fair presentation, materiality, reporting the entity concept or the reporting entity concept, and connected information. Okay, so let's consider these as well a little bit later. But what I want to say here is that these not just apply to S1, but also to the other standards, S2 and potential S3, S4, S5, etc. as well. So we should not look at this in isolation of a particular standard, but these are the core conceptual foundations which we should apply to every single standard that we use within the sustainability standards frameworks. Okay, in terms of fair presentation, a complete set of sustainability or climate-related disclosures shall present fairly all related risks and opportunities that could reasonably be expected to affect an entity's prospects. To achieve faithful representation, an entity shall provide complete, neutral, and accurate depiction of those risks and opportunities. And I want to emphasize here complete and neutral. Accuracy of description, yes, but the keyword that I want to highlight is complete neutral. The problem with most organizations is that they tend to provide information that is more positive in nature. So what I always say when I talk about integrated reporting is that we need to report the good, the bad, the ugly. So in other words, a balanced presentation. So where complete, neutral, and accurate description of those risks and opportunities. Neutral in the sense, neutral view of it, looking at it objectively and not putting a subjective term where you omit certain things. Okay. Materiality. An entity shall disclose material information about the sustainability, S1 and S2, related risks and opportunities that could reasonably be expected to affect the entity's prospects. So materiality and how you determine materiality would differ from organization to organization. And there are some guidelines given from a principles-based perspective to determine that materiality. So when you are reporting, we need to consider thresholds, whether is this going to fundamentally affect a provider of capital. I use the term provider of capital in a holistic way. So capital, I refer to the 6 capital perspective, not just financial capital. There could be financial capital, manufactured capital, human capital, intellectual capital, social and relationships capital, and environmental capital. So when I refer to providers of capital, I'm capturing that broader picture, okay? So the reporting entity concept. So the entity's sustainability related financial disclosure shall be the same as the reporting entity as the related financial statements. And that's quite straightforward. Last but not least, connected information. An entity shall provide information in a manner that enables users of general purpose financial reports to understand and the connection between the items to which the information relates to and between disclosures provided by the entity, within the entity, and across statements. So, in other words, connectability should be there across the entire when they provide, not just in isolation. Now, most of the issues that are there in organizations now is that there's a separate sustainability report which is not integrated into the entirety of the other reports. But that's where the integrated reporting concept comes in, where it directs you or it guides you to have that holistic view of reporting requirements. Okay. So let's now consider the IFRS S1 general requirements for sustainability related financial information. Now, before we go there, I want to reiterate that S1 and S2 are based on the core principles, or the bigger picture, as they call it, the core contents, and the foundation, the conceptual foundation as well. So keeping those two areas, in other words, these two diagrams in mind, let's move to S1, okay? Now, S1 talks about 5 different specific areas: sources of guidance, location of disclosures, timing of reporting, comparative information, and statement of compliance. So sources of guidance. So there are different sources. Now, when you're talking about sustainability related financial information, this is going to be very broad because the nature of sustainability is in itself very broad. Okay. So the sources of guidance can come from different sources, such as the standards which are from the Climate Sustainability Standards Board. It can come from GRI. It can come from SDGs. So all these resources or any other standard setter that relates, accepted standard setter that can guide you in terms of different aspects of sustainability can be used as a source for guidance for this particular sustainability standard. Location of disclosure, it has to be disclosed with the financial statements. In other words, it is part of the annual reporting set of reports. It's not independent, it's not separate. It has to be within that reporting document. Okay. Timing of the report has to be aligned to that of the financial reports as well. And also, there has to be a comparative information provided, let's say a lagged comparison. Let's say last year, how were we doing? The year before, and the penultimate year, and so forth. How did the organization perform today compared to its past performances? So in other words, there has to be a comparative nature of that information provided. Last but not least, a statement of compliance. The company or the entity must provide a statement of compliance confirming that they are adhering to S1 standard under these general requirements. So let's consider some of the things that can be discussed under the sustainability standard S1. So the focus of the general requirements for disclosure of sustainability related financial information is across the entity's entire value chain. Now, that is a significant, important aspect. So the value chain has to be considered. Now, what does that mean? This includes, you need to consider the suppliers and the customer side as well. Oh, that is tricky because you have to then know that your suppliers, what are they doing in terms of sustainability? Are they meeting the human rights requirements? Are they meeting the biodiversity requirements? Occupational health and safety, work safety, modern slavery, diversity and inclusion, etc. All these things can be looked at from the S1 perspective because it's very broad. Now, in the future, there may be further specific standards coming under each of these different areas. But as it is now, we can look at it from a broad perspective. These are some of the potential areas that you can cover: human rights, biodiversity, occupational health and safety, work safety, modern slavery, diversity and inclusion, etc. So as I said earlier, you can refer to the CDSB framework, GRI, SDGs, or any other equivalent standard or framework that gives you the opportunity to present in this particular, for this particular standard, okay? So I'll just quickly go through some of the, an example of what you can report. So if you're talking about diversity and inclusion, you can talk about the different gender specific hires that you have within the organization, a balance. You can talk about the number of occupational health services that you provide for your staff or your suppliers are provided for. Work safety, the number of, for example, accidents that happen, why it happened, what are the follow-ups that happen. Now, one of the other things I want to mention here is that not all disclosures have to be based on numerical disclosures. So in other words, it can be quantitative as well as qualitative disclosures. So it can be a bit of both. So we need to keep in mind, it's not just one aspect of it, it's multiple aspects of it. And we can report it under quants as well as quals, but they go hand in hand. You can have qualitative disclosures, but obviously it will be better if they are supported with quantitative figures as well. Okay. In terms of S2, climate-related disclosures, the climate-related information talks about three key aspects. It talks about strategy and business model, talks about enterprise value, and talks about financial position, performance, and cash flows, and how it is affected by climate change. Okay, so the beauty of this particular aspect is that the climate related disclosures talks about and very closely associated with the integrated thinking framework. If you look at this, the strategy and business model, how is that affected by climate related information, by climate related disclosures? How is the enterprise value created and affected by climate related information? And what is the value created? What is the value maintained by that organization? And then how does climate related information affect the financial position, performance, and cash flows of that particular entity? So these are some of the aspects that you can consider under the S2 standards. Now, I'm going to quickly take you through, before I go to the next slide, I'm just going to guide you through the sustainability standards. I'm just going to now go to the actual standard, the international IFRS S1 standard, and I'm going to just quickly again go through that for you very quickly. Okay, so this is the actual S1 general requirements for disclosure of sustainability related information. So it gives you an overview of this, of what the sustainability standards is about. So it begins on the 1st of January 2024, and S1 requires an entity to disclose information about all sustainability-related risks, opportunities that could reasonably be expected to affect the entity's cash flows, its access to finance or cost of capital over the short, medium, and long term. So that is, again, one of the key things. There is no short-termism here. It is short, medium, and long term, which is collectively related or referred to as sustainability related risk and opportunities that could reasonably expect to affect the entity's prospects. Okay, so again, there is a bit of history to it, and I think it will be worthwhile for you to access this and look at the standards. I'm just going to sign in here very quickly so I can actually take you through the standard itself. Okay, let's quickly go into the standard. So then if you go here, you can actually look at the objectives of the standard, the scope, the conceptual foundations, core contents, general requirements, judgments, uncertainties, and errors. Now, one of the things I want to touch here is, which I didn't have in the presentation, is the judgment, measurement, uncertainty, and errors. So one of the key messages that is given here by the standards is that even if there is a measurement uncertainty, we are yet still required to give a reasonable view of what we consider as measurement to be. The measurement may be quantitative and qualitative, and you can actually provide a measurement and also give a qualitative description talking about any uncertainty that could be there. Okay, so I strongly advise you to have a look at this, and then let's look at the next one, which I've just looked at with you now. Let's go to the S2 standards, which I've just looked at now. So we looked at the scope. We talked about the objectives of the S2 standards, which is climate-related disclosures is to require an entity's disclosure information about climate-related risks and opportunities that is useful to the primary users of general purpose financial reports, making decisions relating to provision of resources to the entity. Now, I'm going to now get out of this and go back to the presentation again. And I will refer back to this again very soon, but let's get back to the S2 standards very quickly. Okay, so in relation to the climate disclosures, these are the key elements that are going to be affected by the S2 standards. Now, in relation to that, it applies to three specific areas: climate-related physical risk, climate-related transition risk, and climate-related opportunities. So let's consider what these different risks are. If you go to climate-related physical risks, they are the risks that are there in terms of physical risk to the organization's assets that could be caused by climate-related changes. Secondly, climate-related transition risk is when you transition from your existing model to a climate-friendly approach. There could be some transition risks that could be there, which may affect the organization. Last but not least, climate-related opportunities available to the entity that could be seen as potential opportunities by the organization. So I'm again going to move back to the original standards. So if you look here, again, it talks about the scope, it talks about the climate-related transition risk and climate-related opportunities, and it talks about the core contents. As I mentioned earlier, the core contents, which is governance, strategy, and risk management, and metrics and targets, are seen across all the standards, S1 and S2, but as I said, nuanced to climate-related when it comes to this particular one. For example, climate-related, how the responsibilities of climate risk and opportunities are reflected in terms of references, mandates, and so forth. So those are some of the examples that are there in terms of the governance, okay? And also, there are appendices that cover the definitions of the terms. For example, if you want to have a definition of what climate-related physical risks are, they relate to event-driven. From longer term shift of climate patterns, for example, due to, let's say, floods, what is the issue that's going to be affecting the organization, and so forth. I'll give you another example. In Australia, particularly in a town called Shepparton, there was some significant floods very recently that has happened. And there was some discussion that in the future there could be potential, not just Shepparton. Let's look at another country similar to Sri Lanka, Fiji. In Fiji, I had a chat with one of their senior executives there who are in insurance, who's a chartered accountant as well. And one of the discussions that they're having there is that because of climate change, there's significant effect happening within the island as well. So due to this reason, there are situations that are arising where they cannot provide insurance to some of these companies because of climate-related events. Now, imagine that happening in Sri Lanka, where organizations that are in high climate risk areas may not get insurance, business insurance, because of climate-related matters. So that is how serious it is, okay? So let us now go back to the presentation again and continue from where I stopped. Okay, so where does the Sustainable Development Goals come in? So SDGs can actually provide guidance to us on what we present under S1 and S2. For example, there are elements of S1 that can be covered in some of these areas. Sustainable cities, for example, responsible consumption and production, good health and well-being, that could be covered, quality education, gender equality, in other words, diversity and inclusion. So all these frameworks can be used as a basis for reporting. They should not be taken in isolation. This can provide a focus on a holistic approach to sustainability. Similarly, the GRI standards are also equally of relevance to both S1 and S2. For example, the universal standards, sector-specific standards, and topic-specific standards can all feed into how we report under S1 and S2. So don't ever think that they are SDGs are separate. GRIs we report separately, SDGs we report separately. They are all now integrated. And that's where the integrated thinking component comes in. And that's where the integrated report will be significantly important in time to come. Okay. So as I said earlier, the underlying framework for sustainability standards is this framework, which I'm a big promoter of and a supporter of. And you can see elements of this S1 and S2 standard or the sustainability standard coming through from the perspective of value creation, from the perspective of the different capitals, the governance structures, strategy and resource allocation, risks and opportunities, performance, and also finally, last but not least, outlook. Okay, now let's discuss public awareness of environment and ESG. So there is a big relationship between executive remuneration and ESG. There has been research that has been done that links executive remuneration to climate outcomes. Measuring climate change risk and its implications for organizations is critical. And that's where S1 and S2 standards play a significant role in this particular area. Next, GHG emissions is at the heart of ESG because GHG emissions is what affects climate change. It's what affects sustainability overall. It affects everything else. It's not the only aspect, but it is a key element. Now, accounting creates economic reality through the definition of profits. How do we define profits and how do we define accounting if we change the definition of accounting to what I said earlier, and profits, if we substitute it to value, just imagine how we can change the profession to be more holistic and inclusive overall in terms of how we do things and how we present things. Disclosure of climate-related non-financial information is in audited reports impacts on decisions, and that's where the S1 and S2 standards are going towards. So public, investor, and government awareness is related to all these things. If you see organizations that are destroying the environment getting paid, the CEOs getting paid big money, there would be big issues. Now, if you remember, one of the Rio Tinto CEO had to resign because they destroyed, the Australian CEO had to resign because they destroyed an ancient heritage site when they were mining in Australia. So there is public awareness, there's investor awareness, and then there's government awareness. So not just climate, but sustainability outcomes are significantly related to public perception of organizations, and they drive it very, very strongly. Okay. Another important concept that we need to understand or be aware of is the UN Principle for Responsible Investment, in other words, PRI. The UN PRI was developed by investors for investors, and they are going to look at sustainability standards very, very closely. PRI is developed to understand the investment implications of environmental, social, and governance factors. It supports its international network of investors, signatories, in incorporating these factors into their investment and ownership decisions. So long-term view as opposed to short-termism, which leads to better responsibility to environment and society as a whole. So you can see that the sustainability standards also supports the UN principles of responsible investment. So there are 6 areas of responsible investment that I'm going to talk about very quickly. Incorporates ESG issues into investments, analysis, decision-making processes to be active owners and incorporate ESG issues into our ownership policies and practices. Seek appropriate disclosures on ESG issues by the entities in which we invest in. So this is from the perspective of the responsible investors. Promote acceptance and implementation of the principles within the investment industry. Work together to enhance our effectiveness in implementing the principles, and report on our activities and progress towards implementing the principles. So these are the key drivers of UNPRI. So my next topic, which I want to talk about, is infrastructure for ESG. So we may have the S1 and S2 standards that is there, but the issue is we also need to have the systems and processes in place to enable reporting under S1 and S2 standards and future standards, S3, S4, S5, and so forth. So accounting plays a crucial role in a robust system for climate change and sustainability. Accountants must take the lead on this. Accountants create economic reality. Most of climate accounting and sustainability is based around GHG emissions and also biodiversity and all these other aspects in relation to sustainability. Information and knowledge is at the heart of the battle against environment and climate change and also sustainability. So this leads to infrastructure requirements of processing information. So this is where new technologies such as artificial intelligence, big data, blockchain, and analytics would be very useful and relevant. A streamline of system integration, which needs to be included. So data gathering at all levels for both S1 and S2 can use AI as well, because AI can easily automatically recognize and gather some data. Integrity of the data being collected can be, blockchain can be used for that kind of verification at its source. Data storage, we have data lakes, data rivers, and data warehouses, which can provide us some rich information in relation to these climate and sustainability related aspects. Access to data, open source, interpretation of data, analytics, and AI. And then we have the reporting side of things, which is S1 and S2, assisted with SDGs and GRI based on integrated thinking and reporting. So this is the bigger infrastructure picture that provides a streamlining systems that need to be enabled in order to have a robust S1 and S2 reporting system in place. So following that, I'm happy to take some questions and hopefully have a further discussion on this. So thank you very much. I know I've we got about 10 minutes. I've been given an hour to present, but I believe in efficiency. And there is also a saying that human attention is usually around the 40 to 50-minute mark. So I try my best always to have a good presentation within that time frame, a maximum of an hour. So I hope that I was able to give you some insightful information, and not just the S1 and S2 standards alone, but also give the bigger picture of where it sits overall, and also the systems and processes that are needed to enable the implementation of the standards.
Thank, thank you very much, Dr. Latmika. I think you went through in great detail, giving the details of the S1 and S2, and as to how we can really apply it. Because I think it's more on the practical aspects, as you mentioned. A lot of them are attending many seminars and, of course, conferences.
Yeah,
But when they go to apply it, they have a difficulty in getting this done.
yeah.
So, when you look at the IFRS S1, now, if we are really going to apply it for companies, how do you think that the companies should get prepared for it? Because one of the
Okay.
things is that maybe the documentation is also one area. I think people are saying that that should be ready. So, like that,
Yes,
can you just tell us about that? How in
absolutely,
practice, how they
absolutely.
can use it?
So I think the first point is gathering data. I mean, if you don't have the data to report on, that's going to be the biggest problem. I mean, you have a couple of frameworks that are there. You can use the GRI framework, you can use SDGs and any related framework, and start collecting the data in the supply chain, because that is going to be another issue. You have to look at the value chain as well. So it is, who are your suppliers? What are their sustainability reporting requirements? So when you report on it, you have to report on the value chain as well. So you need to start talking to your suppliers and telling them, look, we need this information in advance. You need to start collecting these information in relation to S1. I talked about a couple of areas. I talked about biodiversity. Are you impacting biodiversity? If it's relevant. What is your, so if you can look at, for example, sorry, I'm just going to go through my memory again. So we can talk about human rights aspects of it. Then you can talk about what are the other things. Modern slavery, for example, number of accidents that the organization would have had. So health and well-being. So you have to have this on record. You need to have that information at hand. So data collection would be the first thing, and also it's an ongoing process. You don't do everything in one go. You try to comply as much as possible based on the information that you have and provide a holistic view. So that is where the integrated thinking and reporting aspects uh, of the principles come in. So you can actually use an integrated report as the basis of how to report using the standards as well. So again, my advice for the companies that are required to report is to start collecting that data. And without the data, then it will be very difficult to report on any one of the standards for that matter.
Thank you. All the participants, if you all have any questions, please send it on Q&A, and maybe later, if there's time available, we might be able to take a few questions. But I will now, that we have a few on the panel here. Can I ask Darshini whether she can explain a few things of what is happening in Sri Lanka and what lessons we can take from what Dr. Latmike has presented?
Thank you, Professor, and thank you, Dr. Lakmika, for that insightful presentation on S1 and S2. So from the Sri Lankan point of view, so we have these two standards, FRS S1 and S2, and they have made it mandatory for the first 100 companies by market capitalization from 1st of January 2025, and that will be followed in the next year, subsequent year, 1st January 2026, where all the companies that are listed in the main board of the Colombo Stock Exchange will have to comply with these standards, and a phased out approach is going to be followed, where like all the specified business enterprises will have to comply with this standard by January 1st, 2030. I mean, I think from the Sri Lankan point of view, there when you look at the SLFRS, there are a lot of transitional reliefs given to companies. I think by understanding the challenges also that they might face, I think especially related to climate-related disclosures. So if you look at climate-related metrics, you can see that the full compliance with the climate resilient disclosure requirements, including scope 3 emissions, becomes mandatory 2 years after the initial application date. So there's a transitional relief there. Then we have climate scenario analysis that may fall under climate resilience. So even for that, you see that there has been a transitional relief given for up to 2 years following the mandatory application date of the standard. So there are certain reliefs also given. So there's a lot more reliefs that are given. I just took a few examples because I know that climate might pose some challenges for Sri Lankan companies, especially related to scope 3 and scenario analysis, etc.
Sorry, Darshini,
Yes,
can I just ask for the benefit of the attendees? I mean, most of them might know what scope 1, scope 2, and scope 3 are, but do you want to quickly give a quick one-liner on what scope 1, scope 2, scope 3 are? I'm happy to do that if you want.
Yes, you can do it.
So for those who are attending here, scope 1 is basically, it covers emissions from the sources that an organization owns, in other words, within the entity, or controlled directly by the entity. For example, let's say if you're burning fuel in your fleet vehicles, that is part of your scope 1 emissions. Okay. Scope 2 emissions are emissions that the company causes indirectly. And that comes from the energy it is purchased and uses in its production of whatever the services it's doing. For example, the emissions that may be generated by the electricity company or the water company or the gas company that you're accessing that particular scope 2 emissions relating to the scope 2. Now, scope 3 is a little bit more trickier because scope 3 encompasses that the entire value chain, which is not necessarily produced by the company itself and not necessarily in relation to its direct activities, but those that are indirectly responsible for it in terms of the value chain. And that's where the S1 and S2 standards are very interesting because it talks about the value chain. So that's where scope 3 becomes a lot more tricky and more integration is needed and systems are needed. And that's where the last slide where I talked about verification at the source using blockchain, AI and other areas comes into place, because scope 3 would be very difficult in the current scenario to kind of capture because it's all over the place. I hope that gives you a context of scope 1, scope 2, and scope 3. Sorry, Darshini, I didn't mean to interrupt, but I thought for those who are present, it might be worthwhile just to give a quick overview of the 3 different emissions, scope 1, scope 2, and scope 3. Thank you.
Yes, thanks, Dr. Lakman. I think that was very helpful. Yeah, so I think that is exactly why that, the reliefs are being provided to companies for these type of disclosures, because they need some time to get their systems in place to get it done. Yes, so that is just a brief on my part, Professor.
Thank you. Mr. Gajendra, do you have anything that you would like to take up? Any question you have or clarification?
No, so as usual,
Yeah.
Dr. Dieter presentation will updated presentation, and it's a eye-opening for starters. Thank you, sir. Thank you for the.
We have received some questions. You have answered them, or you like to speak on them, Dr. Lakmika? I think.
Sorry, I have answered one, but I haven't answered the other. So there is another question
Yeah.
in terms of assessing the value to record will pose a problem in Sri Lanka, specifically when the audited reports are scrutinized by the tax authorities and other government institutions. Assessing the value to record. What does that mean? I don't understand the question.
Gajendra, anything that on? I can't see that one in answered.
It comes under answered.
Right. Okay.
Uh,
Assessing the value to record will pose a problem in Sri Lanka,
why?
especially when the audited accounts are scrutinized by the tax authorities and other government institutions. Assessing, I can get Mr. Ivo. Ivo is there. Ivo, would you like to? I can take you in so that you can explain that.
Because I don't really understand what the question is. Because so if it is being scrutinized, why is there a problem of it being value to record?
Okay, I will. Ivo, I've given you the opportunity to speak. Just see whether you can.
Indukuma, you are now in the chat. If you can unmute yourself and just explain the question, that will be very useful. Hello?
Are you
Okay.
there?
We can move on to the next question in that
We'll go to
case.
the next one. Yeah.
So is there a limitation of the use of the word compliance with S1 and S2 until we comply all the requirements of S1 and S2? If so, since the implementation is progressive, at what level company states it complies with S1 and S2 standards? Okay, that's an interesting one. So the companies would need to report on the standards. Compliance means compliance within that company based on similar companies in that particular area or in the sector. So there would be some sector specific requirements for disclosures, and that's where the standard other related documents comes into place. For example, if you're reporting on in a particular sector, then you can take guidance from CDSB or GRI or SDGs, or actually CDSB and GRI, because it has sector specific standards, it has task specific standards. So that is where you get the guidance from. So as you and I both know, the S1 and S2 standards are principles based. So because of that, you need to then use existing frameworks to determine and apply judgment. So there is no right or wrong answer. It depends on the sector, depends on how you're reporting, depends on the framework that you're using. So it is going to be challenging, and how we implement it is going to be, debated. And it will take time for people to or organizations, countries to realize what that threshold is over time. But again, the best guidance that can be given is that there are some guidances with the other the standards that has been provided by CDSB, GRI, and SDGs that can be used as guidance. Okay, so that's done. Then there is another question on could you please explain again the scope 3 emissions? Yes, I can. So scope 3 emissions are those emissions that are outside of the company. So scope 1 and scope 2 are considered as what the company is responsible for. Either directly or indirectly, the company is responsible for it. Scope 3 emissions, the company does not have control of it. Whereas Scope 1 and Scope 2, the companies have direct control of those emissions. Scope 3 emissions are those that are there in the value chain. I can give an example. Let's say you're buying something from a supplier, okay? Scope 3 emissions would involve or include all of the emissions that your supplier also has. In other words, your supplier Scope 1 and Scope 2 emissions, in addition to your own. So that is Scope 3. Does that make sense? Are you okay with that now?
Yes, one thing I want to ask is now, say for export industries, now
Yes.
some of these things are going to be applicable. So,
Yes.
how are they going to take care if all these
So
are?
they will have to get that information from the people in Sri Lanka. So the foreign, the people who are importing from other countries would need to then contact the supplier and find out these details. That's why I said systems have to be in place. And you saw that in the last one, AI, blockchain, and all these other systems would need to develop significantly going forward in order to authorize this kind of thing.
Yeah. No, because what I feel is the Export Development Board, I don't know
Yes.
whether they have really thought of this, but they may need to really educate the exporters on the sustainability standards. Is that something you think is necessary, or how does it go?
Sorry, can you rephrase the
No, no,
question,
what I'm
Prof?
saying is now we have the Export Development Board. They are
Yes.
really in charge of the export sector. So
Yes.
if they may have to have a special maybe campaign or maybe lectures to tell the exporters what how they should comply with the sustainability standards. Otherwise, they may have a problem in exporting goods overseas. Is that something
Correct,
that can happen?
because that's right. So even though the Sri Lankan standards say that the top 100 needs to, or top 100 by market capitalization has to report it, when where other countries, if they fall under reporting requirement, they need to then contact Sri Lankan suppliers, even if they are not in the top 100, and potentially ask for the value chain as well. So it's going to be interesting to see how that takes shape in time to come.
Because what I feel is the sustainability standards will spread faster if that sort of condition comes in, and
That's right.
then the people will implement it. Otherwise, I don't know whether the implementation may be slow, but especially for exports, it might have to be done very fast.
That's right.
Right.
So, Prof, there's another
Yeah.
question here. How will the authorities address the complexities of data collection, validation, and assurance processes to ensure the accuracy and reliability of the disclosed information, specifically concerning climate-related risk and opportunities? Okay, this is where external assurance comes in. And also, it's not necessarily the authorities that need to address it. It is the organization. The organization would need to look at reporting on it. So it is the organization that needs to ensure that the data is validated, is accurate, and is within the thresholds. There would be, I mean, there are areas that it's very difficult to measure, and that's where both quantitative and qualitative measures come in. So in answering that, external assurance would be a good approach to ensuring that the data is collected, validated, and that the data is accurate. The assurance processors will then require experts in that area to come in and look at it. So it may require a little bit more complex assurance services in addition to the financial statement audits as well. Dilshad, I hope that answers your question.
Actually, if I can add on that, I mentioned about the survey that was done by IFAC, AICPA, and CMA, and there they have found that the audit firms are now increasing the doing the assurance, because a lot of them feel after the audit it might be easier for them to get the assurance done through them. So
Correct.
definitely, I'm sure a lot of the audit firms locally will have to now maybe have the to build the staff to do this.
Absolutely, absolutely, and it's happening here as well. I mean, Grant Thornton is actually my good friend Darren Scammell. He's the head of financial services for Grant Thornton in Australia. He was previously a partner at KPMG. So they're actually driving this element very seriously in terms of sustainability and climate change assurance. And also there are a couple of other organizations that are looking at this aspect of it, but a lot of people don't understand the significance of it. And there's going to be a lot of training that's going to happen in the next couple of months, particularly in Australia here, because most companies don't know what to do. And we've been approached by a number of organizations asking, hey, what's the first point? Where do we start? So we are looking into that as well. So there's another question here, Prof.
Yeah.
S1 and S2 should comply with for 31/12/2024 FS reporting for public companies. No, I think from my understanding in Sri Lanka, it's only applicable after the 1st of January 2025. I mean, that's what Darshini said, isn't it?
Earlier application is allowed. I mean, you can apply it from 1st of January 2024, but it's not mandatory. It becomes mandatory only on 1st January 2025.
Okay. That's excellent. So the next one is, what are the things a company can do to speed up the alignment to S1 and S2? First of all, training. That's the first thing. You have to start from the board. That's the bottom line. If the board is not supportive, it's not going to get anywhere. The board will have to start making themselves knowledgeable. They need to start being proactive, and obviously it has to come from the top. So those charged with governance, in other words, the board, would need to be fully on board, and training, giving them a quick training in terms of strategic level training would be the first steps. I think there was a beautiful article by Professor Paul Mather, a professor of accounting from La Trobe University, is a fellow Sri Lankan. He did a
advisory council. Yeah, he's a member of.
Yeah, so he did a beautiful short document for CPA Australia on this particular area, specifically targeted at the board. You should be able to, if you Google the CPA Australia S1 and S2 standards, it should come up. So that's one thing I would recommend for you to look at. Also, there's another question: it is correct to give a neutral view of what has happened, which I'm in 100% agreement with. However, when it comes to an example like work safety incidents, where it would affect the image of the organization, what would be the motive of the organization to disclose objectively? Okay, that's a very good one. But the motive would be that they are showing that they are being transparent about it, and then also the follow-up action taken after work safety issues. So they can be seen as, yes, this happened. They're owning up to it, first and foremost, being transparent. They're acknowledging that something happened, and they are remedying it by putting certain things in place so that it doesn't happen again. So then they are seen as having integrity. So that is where the motive is for an organization. There's another question. In Sri Lankan context, does any data at country level available to assess impact of climate change and areas of impacts, for example, increasing health concerns, etc.? Let me reread that question. In Sri Lankan context, does any data at country level that is available to assess impact of climate change and areas of impact, for example, increasing health concerns, etc.? I'm not 100% sure. Maybe someone else who is in Sri Lanka might be able to answer that. Either Gajendra or Darshini. So is there any databases available in Sri Lanka that provides this insight? There are some international databases that covers regions. So there was KLD database and things like that, which does give certain visibility to country. Then OECD would have their own data sets. UN might have their own data sets, but I'm not very sure about Sri Lanka specific data that is available yet. But obviously there should be something.
They will have records of what is now say accidents happening in a workplace. Then there are certain ones you have to report to the labor department. Then maybe the census and statistics department may have certain information. So some of the there would be certain information, but maybe taking into account the sustainability standards, they may need to look at that, where how data can be, because Sri Lanka is very poor on
Yeah.
statistics. So this might be something that we may need to relook and
Yeah.
see how data could be collected.
Yes. Professor Vatavala, can you please bring in Professor Charumati? She's there in the
Yes, yes, yeah.
the
Right, okay.
Professor Charumati is the head of department and dean of business in Pondicherry University in India.
Right, let me see.
She's an expert in the area of sustainability and
Can
climate
you put
change.
your hand up, Professor Charmati? Okay.
You can search, Professor.
Yeah, I'm looking for the hand, but
There, she has raised the hand. Yes.
yeah, she has raised, but I can't get the name.
It's Charumati B.
Yeah.
Charumati B. I can see her if you search on the
You can see.
yeah, she's there. I can see her. She has raised the hand. Under attendees.
But I can't see it. I can't get on this one. Right, okay. I'll take her to the panelists, okay?
Thank you. Thank you, Prof.
Yeah, okay, fine. I think she's there, yeah. Has she come? Yeah, okay, I think she's there.
Yes. Professor Charumati, welcome.
Thank you, Professor Lakmika, for enabling me to join. Thank you, Professor Lakshman.
Yeah, yeah, nice to
So
see you, yeah.
I thought of working on a research paper. Can we design this climate justice initiatives of companies through these S1 and S2 disclosures? How far they are concerning about the climate related disclosures or climate justice?
Yes. That is a very interesting area to look at, because I don't think that area has been explored as much. And I
Yes.
think it is definitely an interesting area to look at. I think Professor Charumati and I, we've done some work in relation to climate related emissions. So we looked at 10 years worth of data for the highest emitters globally, and looked at where legislation actually affects emissions, whether voluntary or mandated legislation affects organizations in their emissions, whether it drives emissions or reduces emissions. And what was found was that mandated, in most cases, mandated legislation actually reduces emissions, whereas voluntary systems in place only increases. So that was very clear. So that's an interesting outcome, because the fact that S1 and S2 standards are being mandated is very positive, because then it will drive organizations to actually do some work on it, I think, in my view. So that's a very important and valuable point, Professor Charumati. Thank you. I think that's something that you can probably have a,
We
get
can
a
work on.
PhD student for. Yeah.
Yeah. Climate justice is now being talked about. And
Yes.
there are a lot of countries which are really suffering from water crisis and other things. So this
Right.
climate justice angle, we can also try to understand.
Of course.
Thank
And
you.
Professor, for information, Professor Charumati is the head of Pondicherry University's business faculty. So Pondicherry University is a federal government university in India, so which is under the federal system, not the state. So it is one of the most it's a top end university, and Professor Charumati recently won a significant grant from the Ministry of Human Resource, if I'm not mistaken. And
Education now, it is called
yeah,
education
that
now.
project is just coming to an end. So thank you, Professor Charumati. That's a very valuable question. Thank
Good,
you.
Professor Charmati. I think we also can, now that you have been
Yes, sir.
introduced, we will also like to work with you. You mentioned about certain research work. Maybe
Yes.
later I'll get the details from
Sure, sir.
Mr. Lakmika, and contact him.
Yes.
Okay.
Yes. Thank you
Uh,
so much.
Please hang around, Professor. That's fine.
Yeah, she'll be there. Yeah, she's now on the panel. Yeah. Okay.
Fantastic.
There are a few more questions, I
That is
think.
the power of my collaborator.
Thank you, Prof. So there is another one. What is the best way to convince the top management to align to S1 and S2 in general for ESG? So the best way to say is that it is mandatory. So that's it. But just because it's mandatory, it doesn't mean that you'll have the support. They may just use it as a tick in the box. To actually have their support, the best way is to provide them training, to show them that this is better for the organization to in terms of its own value creation. And that's where integrated thinking comes in, where if you use this in terms of its actual power to create value, then it's a win-win situation. So if you can convince by providing training, I think that's the best way to do it. There's another question. What is the GHG emission standard recognized for reporting in SL? For UK, it's DEFRA. I think there are a number of standards which can be used. I know for a fact that in Sri Lanka, there's a friend of mine who actually does the actual emissions calculations. Just see.
I don't know whether Darshini has any information. She has been. Darshini, do you have any information on that? On the
Yes, I
emission?
think it's the greenhouse gas protocol that is recommended by the standard.
There is a standard
The
in terms of
accounting
how it is being
measured.
measured and recognized. So I think I'm not very familiar with Sri Lanka in this context, but I know a good friend of mine is actually the CEO of Carbon Consulting Company, CCC, Sanit Vijayaratna. He's based in Sri Lanka. He works with Professor Mohan Munasinghe as well. So I think he would be a good person to get in touch with in terms of getting the actual calculation of the carbon emissions done in Sri Lanka. They've done the carbon emissions calculations for a lot of companies in Sri Lanka, and I worked with him in the past couple of years as well, and I'm happy to recommend him as well. So Sanit De Silva Vijayaratna from Carbon Consulting Company, CCC.
Professor, if I may add, one consulting company from India, Climate Era, it is also doing this particular course, short-term course on GHG accounting, wherein they allow the student to do a capstone project through which they will learn to measure CO2 emission from each facility, like a building, house, or a factory, like that. So now that particular course is going very well in India. So this measuring the GHG accounting emission is getting measured from each facility.
That's a good point, Prof. There's another question. What I meant was, sorry, this is Inder Kumar. He says, what I meant was once the systems organizations agree on a method of valuation and record, presuming the figures are valid, how do we meet the assessment of such figures by the government authorities? They also need to be educated on these matters. Absolutely. If everybody has to be included in this process. So the assessors, the tax department, or anyone else who needs to look into this would need to be on top of these overarching standards. Yes, absolutely. Because that's why I always say integrated thinking comes into place. Without integrated thinking, it's very difficult to have this kind of standard implemented. So the government, that's where when you're talking about government authorities, you have the two of the professional bodies who are government representatives, basically CMA Sri Lanka and iCastle. So they are responsible for working with the authorities to educate them and to provide that feedback. Correct me if I'm wrong, Professor Vatawala.
Yeah. No, that's correct. Yeah. I think there was a question. They're asking whether the slides can be made available. I don't know.
Yeah, I can make them available. That's fine.
So that we can give. Are there any questions from our panel? Darshini, you have any questions that relating to what Sri Lanka is doing and what you may need to clarify?
Just a question, Dr. Lakmika, just to get an understanding of this. Now, I think like most of the companies are now kind of like we are used to kind of assessing a materiality based on impacts. So now with this IFRS standards coming into place and where they are kind of emphasizing financial materiality, how do you think like companies should go about doing this?
That's $1 million question. So my take on it is that they would need to look at it from the perspective of quantifying, first and foremost, what those impacts are in terms of its short, medium, and long term, in terms of its value creation. So when you look at the value creation, you can actually put not a financial value, but some value in terms of its projected value to the organization. Intangible value, that's the key word. So that is one area that you can look at. So there are multiple ways of doing this. So it has to be industry specific, obviously. So so that's the overarching way of doing it. So in terms of specific industries, then they have to then nuance it and measure based on what their industry value creation is for each of the different industries. So I mean, it again depends on the industry, depends on the context.
Dr. Atmika, now S2, since you mentioned about industries, have they finalized for the respective industries, or how does it stand?
There is the if you look at I think from my understanding, the CDSP framework I think has some of that industry specific ones as well, and GRI has that as well. So you can use any one of those standards towards that, towards the assembly, and also for S2 as well. This applies to both S1 and S2, not just in isolation. Yes.
And also the SASB standards, no?
Yeah, of course. And they also have put out industry specific ones, if I'm not mistaken.
Yes, that's correct.
I think one of the other things that they have mentioned is that now earlier some of the companies were having specific special reports on sustainability, but now they are saying with the integrated reporting coming, that all should be connected
Yes.
together. What are your thoughts on that matter and how it can be done now? Because
I think that's where my last slide becomes very relevant. So it's about the systems coming into place as well. I mean, it's a long-term thing. You can't just have integrated thinking and integrated reporting overnight. I mean, people do a good job. I mean, Sri Lanka is a pioneer in integrated thinking and reporting, obviously, because we've been reporting for a long time. Many companies are reporting. We are one of the early adopters. So I think in that sense, Sri Lanka has a natural inclination to be high performers in this area. And also our culture, not just us, even in India, it's the same story, Professor Charumati, because our cultures are very similar. And if you look at all the cultures, our fundamental underlying element is we are connected to nature in terms of our, spirituality as well. So I think if you look at it from that perspective, overarchingly, you need to have everything in place. There has to be a need, there has to be systems being developed. So it is a long-term process, but there are what you call quick wins, short-term wins, medium-term wins, and long-term wins. So it's about recognizing each of these things for each industry and implementing that accordingly. So there is another question here. For scope 2 in SL, where should we get the value of GHG emissions for grid electricity? So that can actually be calculated by a certified carbon consulting company. So that's where I mentioned earlier, CCC is one such company who has authority to do that. So hopefully if you get in touch with one of the companies in Sri Lanka, it could be CCC or could be anyone else for that matter, they would be able to come in and calculate that for you based on the electricity that you use.
thank you very much, Dr. Latmika. I think you spent a lot of time with us and went through in detail. We are very thankful to you, and of course, we have been able to renew our friendship, and also you brought in a new Professor Charumati, so I'm sure that we can also work with her on many
Sure, sir.
matters that are there. So what I would like to do, I think we have our council, Mr. Gajendra is there. Mr. Gajendra, can you give a vote of thanks to Dr. Lakmika?
Yes, sir. Thank you very much for giving the opportunity, Professor, to do this vote of thanks. As we are in the correctly Doctor mentioned that we are in the process and as required by the regulators also now, the legal requirements also started with the top listed companies. So we know for the attendance could have been got a clear idea about how to report the non-financial, mainly the how to evaluate and report it. So thank you very much for your valuable presentation, as well as we would like to thank you for introducing another professor from India. So we
Professor
can have
Charumati, yeah.
Professor Charumati from India. So we can have more work in the future together.
Sure.
Thank you.
Just one other question I have for the panelists. Sorry, not for the panelists, for the attendees. I just wanted to ask, in terms of feedback, was today's presentation useful to you? Have you learned something from it? From my perspective, I hope that I've been able to give you something. So I would love to hear your thoughts. If you don't mind, if you can type in and let me know whether this was valuable, that will be very useful for me in terms of further enhancing or
They can
nuancing
raise their hands.
presentation.
They can raise their hands. Yeah.
Or they can type something if they
Yeah.
want to. Either way, I'm happy for that.
Yeah.
So,
Yes, there
would,
are
Sorry.
several people raise the hands now.
You can send it. You can send some remarks on Q&A. That's fine. You know.
it's very important. So this is what I mean by integrated thinking and the holistic view. You must always, I would love to get feedback and see where I've added value. So where I created value. So that is again a two-way thing. And also please feel free to connect with me on LinkedIn. I'm available on LinkedIn under Luckmika Pereira, Luckmika Pereira, Perera. If you want to connect with me on LinkedIn, please connect and say that you've attended my seminar, so I know who you are. And then send through a connection request. I'm happy to connect with you and keep in touch that way as well.
Okay. Right. Can't see anyone. Right. Okay. So we will also tell. I think Ms. Shanti is there. They can also send any comments to us to our address. Registrations, Ms. Shanti, and then we can pass it on to Dr. Lakmika, because I think it will be very useful. And also, maybe I'm sure all of them will want you to come again and give another lecture. That is, of course, definitely. So
Happy to do that, Prof.
let's work
Happy to
out and say, depending on whatever questions that are raised,
Sure.
we can let you know, and then maybe we can work out something.
That's fine.
Right. So thank you very much, and then we wish you all the very best, and we'll keep in touch. Of course, we are going to have our integrated reporting awards also, and you're a judge on that. So, and the panel of judges. So we will have
Thank you
a
very much.
meeting with.
It's an
Okay.
honor to be here, and thank you very much for
Thank
having
you.
me. I really appreciate it. Thank you so
Just to
much.
tell everyone, Dr. Lakmaki is also from Sri Lanka. You know, although he's now in Melbourne, Australia, he's a Sri Lankan. So I'm sure he would like to support us in everything, you know. So thank you. Thanks a lot. And thank you, Professor Tatumati. We will keep in touch with you also. Okay.
Thank you so
Okay.
much, sir, for giving me
Okay.
this.
Thank you very much,
Thank you.
everybody.
Right.
Have a
Thank
good
you
one.
then.
Thank you.
All the best.
Thank you. Bye-bye. Bye.